Every month, millions of people around the world wait for that same familiar notification: the paycheck has landed. It feels good for a moment. You pay your bills, cover expenses, maybe enjoy a dinner or two out, and before you know it, it's gone. Then the cycle repeats next month. The sad reality is that for most people, income never turns into wealth. It enters your account, it's spent, and disappears. But what if you could change that cycle permanently? What if each paycheck you received became a seed with source of long-term financial growth? That's exactly what we'll uncover in this video: how to transform your paycheck into a real investment portfolio that generates wealth over time. The first step to breaking the paycheck trap is understanding the difference between income and assets. Income is money you earn through active effort, your job, your business, your freelancing work. Assets, on the other hand, are things that generate money for you even when you're not working. Stocks, bonds, real estate, dividend funds, businesses, royalties, and even digital assets like intellectual property or content. These are all vehicles that can make your money grow. Financial independence begins the moment you decide that part of every dollar you earn will go into assets that continue to pay you long after you stop working for them. Let's start with a concept called the three-bucket system. Think of your paycheck as being split into three main categories: survival, stability, and growth. The survival bucket covers essential expenses: rent, food, utilities. The stability bucket covers safety into your emergency fund, insurance, debt repayments. And the growth bucket, that's where wealth begins. It's where you channel your remaining income into investments. Most people spend 100% of their paycheck on survival and comfort, but true financial growth starts when you deliberately allocate a percentage, even as small as 10%, into your growth bucket every single month. Now, the most common objection is, "I don't earn enough to invest." But here's the truth: investing isn't about the size of your paycheck, it's about discipline. Even small, consistent contributions can build massive wealth through compounding. Let us say you invest just $200 a month in an index fund that returns an average of 8% per year. Next, let's talk about asset conversion, the process of converting your earned income into ownership. The goal is to slowly shift from being a 100% earner to a partial owner. Ownership is what separates the middle class from the wealthy. When you buy a share of a company, a piece of real estate, or even a small stake in an online business, you're converting your cash into ownership. Ownership produces dividends, rent, royalties, or appreciation. That's how the rich earn while they sleep. But not all assets are equal. It's important to understand how to balance risk and reward. For beginners, starting with simple, diversified assets like index funds or ETFs is the safest way to begin building a portfolio. They require little maintenance, have low fees, and grow alongside the economy. As your income rises, you can diversify further, maybe 60% in equities, 20% in bonds or real estate, and 20% in cash or alternative investments. The key is to keep your portfolio growing, not static. A crucial step in turning your paycheck into assets is mastering cash flow control. You can't invest what you can't control. Start tracking your expenses, not to restrict yourself, but to reveal your habits. Every unnecessary expense is a lost opportunity for growth. A $150 monthly streaming habit could become $1,800 a year, and with consistent investment, tens of thousands over time. Financial independence doesn't come from earning more, it comes from keeping and investing more of what you earn. Another essential element is automation. The most successful investors automate their investment contributions. Treat your investment account like another bill and non-negotiable expense. The moment your paycheck lands, a fixed portion should automatically transfer into your brokerage or savings account. When you remove emotion and decision fatigue from the process, consistency takes over, and consistency compounds faster than motivation as your portfolio begins to grow. The next step is reinvestment. Don't cash out dividends or small profits. Reinvest them. Every dollar reinvested becomes a soldier that fights for your financial future. This reinvestment cycle is the backbone of compounding. It's how small investors become millionaires over decades. Albert Einstein famously called compound interest the eighth wonder of the world, and he wasn't exaggerating. Now, let's address one of the most damaging myths, that investing is only for the rich. The truth is the opposite. Investing is how people become rich. Waiting until you earn more to start investing is like waiting until you are fit to start going to the gym. You start small, you stay consistent, and over time, you build strength, or in this case, wealth. Another common mistake is trying to time the market. You don't need to predict the perfect entry point. You need to participate consistently. Dollar-cost averaging, investing a fixed amount regularly, smooths out market volatility and ensures you are always in the game. Remember, time in the market beats timing the market every single time. Once your investments begin to grow, protect your wealth through diversification and education. Never put all your money in one company, one asset class, or one idea. The wealthy build portfolios that can survive storms. They play the long game. Staying calm when others panic. Your ability to stay invested through market downturns is often what determines your long-term success. Financial independence doesn't happen overnight. It's the cumulative result of thousands of small, disciplined decisions. Every paycheck you earn is an opportunity to consume or to compound. Most people consume. The financially independent choose to compound. Before we wrap up, here's a simple blueprint to follow. Save before you spend, automate it. Invest before you upgrade your lifestyle. Diversify your assets gradually. Reinvest every return you earn. Stay patient, consistent, and informed. Remember, your paycheck is not the end, it's the beginning. Every deposit you make can become a step toward freedom, if you direct it wisely. And one final note, this video is for educational purposes only. It's not financial advice. And you should always do your own research or consult a licensed advisor before making investment decisions. The path from paycheck to portfolio isn't about luck, it's about discipline, structure, and time. If you found this video valuable, make sure to like it, subscribe, and share it with someone who needs to break free from the paycheck cycle. Because your future wealth is built not by what you earn, but by what you choose to grow.